Very good morning. Welcome to the first session of cost accounting. That I am going to discuss about cost accounting and how it is different from financial accounting, what are the scopes and rules of our cost accounting, and then we'll proceed ahead according to the plan that what are unit cost, total cost, and how to calculate that. If we talk about the cost accounting and financial accounting, what is financial accounting that we have? Financial accounting is nothing. It is the process of identifying, recording, classifying, summarizing, analyzing, interpreting, and communicating a business transaction in terms of money. So this is how we are defining a financial accounting. That what is actually a financial accounting? Financial accounting is that it deals with only the first accounting cycle step, that is journal, that is just dealing identification and record. Where second one is classifying, that is part of ledger, that when we are preparing ledger account based on the characteristics, based on their figures, so we are preparing it, right? So this is what we have to prepare, that is what I'm classifying. And then next one is summarizing. Summarizing is the purpose of making a brief report of the whole dealing happening in the organizations. Then we are doing these things and then analyzing, interpreting of business transaction in terms of money, that what is happening in the organization. So that is what financial accounting. So one of the limitations that each and everything should be analyzed based on the monetary value, nothing else. So that is what we have. If you see Robert and Anthony, he defined that financial accounting system is means of collecting, summarizing, analyzing, and reporting in monetary terms information about the businesses, or which we say that business dealing which we have. So that is what financial accounting actually. Or the second definition which says financial accounting is the primary concern with the record of bookkeeping or record keeping directed toward the preparation of gross profit account, profit and loss account, and balance sheet that we are preparing. Or the second one which is written, identifying, it is a process of identifying, record, summarize, analyze, interpret, and communicating of business transaction in terms of money, which is clear corporation there. That is what financial accounting, which we have financial accounting cycle, and then we are applying it there. Now coming to the cost. What is actually cost before proceeding to cost accounting? Cost is nothing but it is the amount of money which is used for the purpose of productions or for the purpose of rendering services. So when we are paying any money, that we are making any amount that we are using for the resources which we have, that is for the production purpose or the service purpose, that is what it is called cost. And then when we understand that, suppose providing services, producing some goods, so the cost of goods is how much, so that you have to know about it, and then you will get to know about the different aspects of cost accounting. Now when coming to the cost accounting is nothing else, it is the analysis and classification of your expenditures that you have. That what is actually that we have different expenses that we have, where I should pay. So you have to analyze, classify first, then you need to analyze it, and then you will take the decision. So that is what all about cost accounting. That we define that cost is the amount of resources which is used for the purpose of production or services. But here the cost accounting is the analysis and classification of that expenditures that we have. If you say Walter Beck, we define that cost accounting is the provision of such analysis and classification of expenditure as well as enable the total cost of any particular unit of productions to be ascertained with the reasonable degree of accuracy, and at the same time to disclose exactly how such total cost is constituted. The second definition says that cost accounting is the proper allocation of expenditure whereby reliable cost may be ascertained and suitable present to afford the guidance to the procedure in the control of their businesses. And according to Wood, he defined that cost accounting means application of principles of accounting in such a manner that managers are always assured of detailed record analysis of expenditure income in the connection with the operation of any business, so that we are able to measure performance and control activities. So when we define that cost accounting, nothing else, it is just the analysis and classification of expenditure for the business operations that we have. So that is what it is all about, cost accounting that we have. Now, what is the scope of this cost accounting that we have? The first scope is techniques and process of costing. Techniques and process of costings have two main steps, which is one of them classification and second one of them is allocations of cost. So what is classification and what is allocations? We have a cost sheet. In the cost sheet we have different stages. That first we have factory overhead, we have working overhead, administrative overhead, other direct costs, and then we are having selling and distribution overhead, and then at the end we have the selling. So when you are preparing, so you have to know the different elements of it, that what are the different elements that we are accruing costs at different stages, that should be defined. And then when you define, then allocate the budget for it. That is what about the technique and process of costing, that which techniques that you are applying for the purpose of this organizations. Then cost control. Now you defined different elements, different than allocation of the money. So how to control that? Most of the organization, they are focusing on the cost minimization side. If you see, cost control is the guidance and regulation by executing the action of cost operating and undertaking, that inventory control, product control, quality control, budgetary control, standard costing, and etc. So when we discussing about the cost control, that is like one of them is inventory control. So which technique of inventory we are using? That we should have the same unit of product should be left with us with the less cost, which is better, like we are discussing FIFO, LIFO, WAM, SAM, and HIFO. These different methods that we have. As well as with the product control, quality control, budgetary control, standard costing control, and other. That how to make control of your expenses, that should be the important point for the organizations that we have. And then the next one is cost audit. Cost audit is nothing but it is highlighting of shortcomings, like we'll check it out, the result that costs occurs in these different stage. So what are the let me check it out, where the shortcomings are there, where we are use more money, which is become more expenditure for us, we can minimize that or not. So that is what the overview of your cost systems that you are applying. And then we have budgetary control. So budgetary control is nothing, it is the comparing or the controlling of your budget according to the plan of your operation and actions, that we are going to produce this. So we have defined budget. So now how to control this budget, that is we define the plan, and then into actions we will do according to the plan, we will proceed ahead. So that is what actually the budget, that you will control your expenditures as well as you will generate income for the organizations. So when you are generating income for the organization, that is a positive point, and this is how to minimize the cost, and we will control the budget of the organizations for the productions or for the services. So this is the scope of cost accounting. Now how it is different from the financial accounting. Normally when we say is that in the cost accounting we are preparing balance sheets, we are preparing income statement, we are preparing cash flow statement, but where in cost accounting we will not prepare. Cost is only concerned with the item cost, unit cost, total cost of the productions. So what is the total cost of it, how to minimize that, what is my unit cost that I have. So this is what all about cost accounting which concern about it. The next one, financial accounting, cannot be disclosed each and every information for the less period or for the one day for one product, but where in the cost accounting, that is what we are disclosing the cost of each and every product which we have prepared. So the cost accounting is easily that we can define it and we can prepare it for the even a unit of cost, but financial accounting for the unit is difficult to prepare. It is need very clear-cut analysis, and we should have more careful about that. And then we say that financial accounting deals only with facts, numbers, nothing else. But where cost accounting deals as well with the facts and with the estimations, that we are going to estimate that what are the how much budget we need for the production purpose of a particular things, how much is budget we need for the producing of such unit of the product. That is what we will estimate based on the historical figures. So in the financial accounting, that deals only with the numbers, so we keep record of that transaction. But where in the cost accounting we are going to estimate that how much sales suppose I should have to recover my cost. That's what break-even point that we have. The next one is financial accounting is concerned about long period of time, where cost accounting is concerned for giving a unit of units of products, cost of unit of products, or for the 1 day, for the 1 week, for the 1 month, for the 1 year. So that is, we are not limiting, we are not bounding to it. So that is what the financial accounting has for the minimum period of income statement is 1 month. For the balance sheet is 1 year. So we have to prepare according to the time, according to the period that we have it. The next one is cost accounting is do not form any ordinary double entry process systems. Like financial accounting is dealing based on the rule of based on double entry system. Double entry system, that is debit and credit, where in cost accounting we are not using any debit terms or any credit terms or any golden rule of accounting that we have. So that is what the next difference between the these organizations. The next one is that cost accounting is giving you the result of each and every operations activities taking, where in financial accounting you will not get the result, but it will show the profit of the company after a certain period of times. So that is what all about the organization which is concerned. And financial accounting is concerned about profit and loss and balance sheet of the organization along with cash flow statement. But where in the cost we will give the each operation cost, expenses that occurs, and we are preparing. The next thing is that when we are saying that financial accounting and cost accounting is deal, that in cost accounting we are we can eliminate the cost, we can decrease the cost, we can control the cost. So that is what the purpose of cost audit and cost control that we have. In the financial accounting, you cannot decrease that, because interest is fixed, capital is fixed, depreciation is there, so we cannot minimize it. So that should be written in through senses that we have, but we cannot keep it less. But in the cost accounting, we can eliminate certain costs, we can delete certain costs, which is important for the organization. The next one is that financial accounting is generally a better picture, a broad picture of a company, that what is there going on. But financial cost accounting is maybe giving not a broad picture, that is maybe a picture of one goods producing, providing service that producing. So that is why people will understand that how much cost of unit is occurs, but in the financial accounting people will not understand that what is actually happening in the balance sheet of the company without, if you are not specialist into that, if you are not specialist, or you are not able to analyze that, so you cannot do that. That is what the difference between these two. Now, the rule of cost accounting in decision making. What is the rule of cost accounting when you are making decisions? How it is important? First, you have to determine an analysis of cost. That is what you need to know as a accountant officer or as a cost manager of the organization, that what are my fixed costs, what are my variable costs, what are my semi-variable costs. So fixed cost is that cost which cannot be changed. Variable is that cost which can be changeable with the level of production, but semi-variable is the cost which is not fixed as well as not variable in the middle, that for the short period of time we are using it. So that is what the main objective, that you have to know about the different costs occurs at different stage, and then you need to analyze that. That is what the first rule of cost accounting. The second one is cost control and cost reductions. That as a cost manager, cost assistant manager, cost officer that you are working in any organization, you have to learn how to control your cost of your chemicals and how to decrease. If these costs are there, so how we should decrease that cost. So that is what's important for each and every organization that we have. And then next one is planning and decision making. So the purpose of when we made analysis of different elements that occurs cost, continue or apply the cost control and cost reduction, now you will make plan and decision. So that is what policies, that is what the different tools to implement by the management during the operations, by the stakeholder of the organizations, by the consumer of the organizations, by the government of the organization, which are all of them are the parties interested for the informations. So we are need to make plan, we need to make precision, we need to frame policies, we need to make rules, and then we should be implemented in the proper way. So when you are made these three different rules, so what is the benefit of this to the organization, to the management? First one is efficiency. That when we are applying this method, so the efficiency will be maintained in the very proper way. That is one thing. Second one is cost, provide the information about the summation and parameters. That based on the historical data, we will provide the informations based on the historical data will estimate the futures operations, and when I have control the cost and define the future operation, so that is what my profit will generate and increase. So when you increase the profit and generate, so the efficiency among the labor, among the material, among the methods, among the machinery, among the people are maintained. That one is very important for each and every one. That is one. Main, material, method, machinery, and we have material. So that is what important for each and every organization that we have. Now what is unit cost and how it is having a formula? Unit cost is nothing but it is the production of the organization. Suppose that how much cost occurs for each and every production. Suppose if I want to calculate unit cost, so what is the formula? Unit cost is equal to total cost divided by total unit of production right? So how to get, if my total cost is suppose 1 lakh and unit of production is equal to 20,000, 25,000 suppose. So how to calculate the unit cost? So unit cost, we written formula as UC is equal to total cost. So total cost is how much? 1 lakh divided by 25,000. So if you calculating the 25,000, so it will be equal to 4. So what is the unit cost? Is 4. So that is what finding that unit cost. Suppose if it is giving me that I have given you this unit cost, that how to calculate total cost for it. If unit cost is given you for you, so what is the formula? So as unit to total cost is equal to unit cost multiply by unit of productions, right? So unit of productions that we have, we are preparing it, right? So that is what the formula we have. If you see in the below example, so my unit cost is, if I want to find out total cost, so how much is my unit cost? 4. But how much unit of production is there? 25,000. So it will be equal to how much? 1 lakh. Right. So this is how to find out unit cost and total cost that we have. We'll discuss then one more topic, that is what cost center and cost. Then we'll stop with the today's session and then we'll discuss elements of cost in the next session. What is cost center? In the cost center, if you talk about cost center, we have different elements of cost that which is occurs at different stages that we have. Like we have in the accounting system, that is profit center, cost center, expenses center, revenue center that we have. These four are important. In the cost center, we have these three elements: operations, production, and personal cost. Operations deals with the methods that you are using for the organization, the process of the organization, that which process that you are using. That is what part of operation and processing cost centers that we have. Production and service is the part of the production, the raw material that you need to produce it. What are need for the service that they have to provide a service. That is what production and service cost center. Like in operation, I want to apply ISO, International Organization for Standardization. So I want to control the quality. So that is what operation and process cost center. Where a production cost center, production and service cost center is related to materials that you need to produce for products. Where service, we need to provide what are the different expenses, costs that we have to provide the services. So that is what production and service cost center. And the last one is personal and impersonal cost center. Personal cost center is belong to the human being. That is what the humans are need for that. So that is what the cost center for the personal cost. Where impersonal cost is the plant that you are using, the equipment that you are using. You need to have a location for it. You need to have an area for it to store those materials, to produce that material, to provide that services. So for that purpose, we need different things. So that is what is personal cost. That area I paying the rent for it. That location that I am paying rent for it. That anything that is concerned with the non-personal or impersonal cost it is high. Maybe responsibility and accountability to be defined, volume of work to be performed, unit of scope, cost center should be found, cost control activities exercise should be. So this is what actually the overall discussions of today's session. I hope you have learned something, and we'll catch up in the next session for the lecture number 2. Thank you so much for your attention. If you have any queries, questions, you can ask. Thank you.